What's up? What's up, everyone? Can you hear me? My pleasure, brother. My pleasure. Can you hear me, Drop? Yes. Perfect. Thank you. I'll get started here in the next couple of minutes. Just waiting for people to trickle in. That's 8. Got 30 people in here. Stern. Anyway, let's go. What's up, everybody? Hope you guys having a wonderful day. I think we're ready to get started, right? I think so. Beautiful. All right, 1 minute and I'll get started. I can give people two extra minutes, no problem. I had a lot of people just sign up, so I want to give them a few extra minutes and then we can get started. What's good, everybody? What's good? What's good? What's good? All right, we got 40 people in here. Regardless what happens when I record this, it's gonna post to YouTube probably an hour after I finish. So if you can't stay the entire time, that's totally fine because we will post everything on YouTube. All right, Breezy, can I get started? All right, beautiful. All right, what's up, everybody? Today is going to be a short class. It's really the main point of this class is to kind of go over today's SPX 4550 trade, but also at the same time, I want to go over probabilities, win rate, and risk management. Because if you're trading SPX, personally, in my opinion, it's the most important thing to have is to understand your winning percentage, your probability percentage, as well as your risk to reward ratio. So before I start this, I kind of want to show you guys a quick little presentation. Not really a presentation, but it's just a one slide presentation. My favorite is just one slide. Make life easier for me and for you. Let me just get a pen. Cool. So today I want to talk about winning percentage. What does it mean to win, and how much should you be risking in order to make money? So you see me, I post a lot of intraday losses some days, but the majority of the day, the main goal of it is to be profitable at the end of the day. So this is how I approach every single trade. I look at something from a risk to reward standpoint. If I'm risking 100 to make $100, am I risking 100 to make $200? Am I risking 100 to make $300? Am I risking 100 to make 400? So on and so forth. When it comes to a winning percentage, what a lot of traders do is they're always stuck at a 1-to-1 risk to reward ratio. So if they risk $100 today, they're looking to make $100. If they risk $100 tomorrow, they're looking to make $100. They're always stuck at a 1-to-1 risk to reward. What that means is when you're looking at a risk to reward in terms of one-to-one here, I'm just going to share a whiteboard real quick. One-to-one risk simply means risk 100 to make 100. So what that means that if I have a $1,000 in a play, I'm taking, let's say, 10 contracts at $1. I have a 10% stop loss and a 10% take profit. In the long run, if you trade like this, you will never be sustainable, because to be profitable, you need a 60% or higher win rate. So 6 trades out of 10 you take have to be green in order for you to make money. And let me tell you something from someone who's been trading for quite some time. A one-to-one risk to reward in the long run is not profitable, because you have to win 60% of your trades. So when you're looking to focus on your win rate, that's what I'm saying, win rate doesn't matter. Like, to me, for me as a trader, win rate does not matter, because I'm always focusing on a 3-to-1 risk to reward. You know, most of my trades that I'm trading, they're always, you know, at 3-to-1 risk to reward or 2-to-1 risk to reward. And I'll explain by that what I mean. But when I'm trading at a 3-to-1 risk to reward, I just need to win 30% of my trades in order to be profitable. I can take 10 trades, 7 of them be losers, and the 3 trades that are winners outweigh everything. And I'm actually going to show you an example of that today. Let's go to my Fidelity Active Trader Pro. As you can see it right here, 3 losses, 1 winner right here, big boy winner right here. How much is this win? 43,000 plus 28. How much is that? 43 plus 28, 71,000. You see, this is the biggest risk to reward out of all of them. All of them were following a 3-to-1 risk to reward, 3-to-1 risk to reward. This one got stopped out. This one got stopped out, but this bad boy, it didn't get stopped out based on the risk to reward. You know, if you're looking at the trades, I took 4 trades today, 2 red, 2 green. So 50% hit rate. But because I'm sitting at a 3-to-1 or 4-to-1 RR, I end green. See right here today. See SPX. There, technically on SPX today, 63,000. So let's go and understand the reasoning and the meaning behind these win rates and what they mean from a point of view. As a trader, you should be focusing to be in the 2-to-1 risk to reward or 3-to-1 risk to reward. What that means? That means if I have $1,000 into a position, if my stop loss is at 20%, your take profit has to be at least 40%. Because you're risking $200 to make $400. That is 2-to-1 risk to reward. You know, so coming into each play, you have to understand what your risk to reward is going to be on that play. So if you use charts, for example, as a stop loss, let's flip around and go to the charts. I know I'm flip-flopping a lot, guys, but it's the only way I can explain everything. If you are looking from a chart perspective and you say, okay, right now SPX is at, you know, 43 to 43.30. I'm going to enter a play with a stop loss at 45.26. So my risk here is $4. My entry is 45.30. My stop loss is 45.26. So the bulk of the risk right here, if I enter here and the risk is here, I'm risking $4. Can anybody tell me, with me risking $4, where should I at least look to take profit? My entry is 45.30. My stop loss is 45.26. How much should I be at least making for it to be considered a good trade? Beautiful. I see 45.38. I see 45.38. 45.38 right here. For some reason, I can't use the pen here for some reason, so you gotta bear with me. I don't know why. So 2-to-1 RR. So if my entry is at 45.30, my risk is $4. This is the risk. $4 risk. Here, I'll make it in red so you can understand. I'm going to lose $4 if I'm wrong, but if I'm correct, I am going to make $8. This is reward. Trying to keep it as basic as possible so most people can understand. So I know you see this on Instagram all the time. You see this green box, this red box. What are they measuring? This is what they're measuring. If their entry here is at 45.30, their stop loss here is at 45.26. If you go and you take profit at 45.32, you're retarded. I'm not saying you're sorry. I didn't mean retarded, but you're not doing risk to reward properly. You're wasting a trade on a day of mental capital. You know, you're risking 4 to make 2. You're not even doing 1-to-1 at this point. So depending on where your target is, where your entry is, where your stop loss is, it's always important to understand how much are you going to lose before you enter the trade. For example, in today's trade, 45.50, if it was not going to work out in my favor, I made 70,000. If it hit my stop loss, because this is the exact entry. Our entry was at 45.30. We entered right here in this box right here. Let me remove the color. We entered right here, and then our stop loss was right here. So for me, entering this trade, if it were to go against me, if I were to lose, I am going to lose about $15,000, you know, give or take, maybe 12, maybe 15. So technically, in this case, I risked 15,000 to make 70,000. So from a risk to reward standpoint, bring out my calculator, 71 divided by 15,000. This would be kind of a 5-to-1 risk to reward. I risked 15, I made 71. So before coming into every single trade, that's the first thing. I think I'm on the screen. The first thing you should understand is, where is your stop loss? How much is your risk? If this trade were to go bad, how much am I going to lose? So each portfolio is different. Each person is going to have a different risk appetite. Some people will tell you, bro, I'm going to enter 45.30. I'm not even going to put a stop loss, you know, but I'm sized for it. I'm risk managed for it. You hear the word sized for zero. What does size for zero mean? If I usually enter a play with 15,000 capital every single time, sizing for zero is me going $3,000 with no stop loss. It's the same outcome, you know, 50, whether it's 10,000 with a 30% stop loss or 3,000 with no stop loss. If the trade fails, you end up losing $3,000 in both scenarios. So sometimes, you know, other plays, you know, they're sized for zero. You know, you don't want to put on too much risk because the reward isn't too much, or, you know, you're up here and you don't want to miss the momentum push to a higher level. So you're rolling up, or you're managing risk with a smaller size play. But the main play you enter every morning, you should ask yourself, if I'm entering here, what is my risk? What is my reward? In this case today, this was my entry, 45.30. My risk was 4 points. My first PT, 45.40. If you were trading with me live, this is where we took profit the first time. It was $2. We entered here at 80 cents. Right here, they were $2. Took profit. Entry at 80, took profit at 2. Then it came back from $2. It came back to $1. But because I was trimming, because the risk to reward is still valid, I can hold the play like this. My second PT target, 45.50. Honestly, when it came up here at 45.47, at that point I was up 500%. I was at a 5-to-1 RR. I don't have to sit here and hold and wait for this entire big move to the upside. So when it came here the first time, I closed the position because I only risked 15. I'm up 70. I gotta close it. Cool. If I had held it for a little bit longer, an hour, 2 hours longer, they went all the way to $12. They went $15 at one point. So your risk is at $15 is literally like 15-to-1. So those are good risk to reward ratios, because the higher your risk to reward ratio is, the lower your win rate has to be. If you look at my trade, I don't care about win rate. I honestly don't care about win rate. At this stage in my trading, if I could win 30% of my trades, I'm fine, because I'm gonna end up profitable following my risk management rules, following my RR plays. I'm gonna do a what is it called? I'm gonna do a quick example. Say someone who have $1,000 per trade sizing, and I'm gonna show you. So let's say there's a play, SPX, whatever, SPX 45.50 call. See, and you buy them at $1. Let's say you buy 10 contracts, so you spent $1,000. Let's say you put a stop loss immediately at 90 cents. So at 90 cents, you put a stop loss. So max loss you're going to lose is 10%. When the contract is at $1.20, you can take your first trim. Reason being, you can take your first trim because it's 2-to-1 RR. You hit your default RR. If you can't do 3-to-1 RR, 4-to-1 RR, 5-to-1 RR, these are heavier as harder as you go up. If you can't do 3-to-1, 4-to-1, if it's too much risk for you, if it's too much holding for you, and you don't want to hold the trade like this, if you're risking 10%, you see it go to 1.2, and you do it on every single trade. You're risking 10 to make 20. Brother, you can win 40% of your trades and be profitable. It doesn't matter day to day to day to day. All it matters is the end of the week, the end of the month, the end of the year. Those are questions you should ask you. From a day-to-day perspective, you lose 2 trades, you come back the next day, you win 6 trades. As long as the net equal is green, that's all that matters as trading. So you want to focus on your risk to reward ratio as opposed to your win ratio. I know motherfuckers with a 90% win ratio, I win every 90% of my trades, but you tell him show me profit, it doesn't show you, because on the one loss he has, he's all in. He blew the port on the one loss. And a lot of traders are like this. I have 90% hit rate. They're taking profit at 7%, and they're taking their losses at minus 90. Who gives a shit if you have a 90% win rate if you can't make money in the market? Our job is to make money in the market and manage risk. Your win rate doesn't matter. Your losses don't matter. Your wins don't matter. All that matters is risk to reward. The quicker you focus on risk to reward, the faster you'll get to where you want to be as a trader. Because it's all probabilities. It's all probabilities. We go back to the probability sheet real quick. It's all probabilities. You see, I can have a 30% win rate, but because all my trades are 3-to-1, I'm profitable. As you go down the line right here, it's cut off, but it says 5-to-1. If you're 5-to-1, if every single trade you take is a 5-to-1 risk to reward, guess what? If you win 20% only, so you can take 10 trades and 8 of them be losers, but the 2 winners, because they're 5-to-1, you will be profitable at the end. I mean, 5-to-1 is unrealistic to do every single day. Let's be real here. But you should be default at least 2-to-1 in a day trade. It's not worth the risk if it's not. If you're sitting at a 1-to-1, then okay, you need a high win rate. You need a 60-70% win rate to be profitable. You know how hard it is to win 70% of your trades if you take 10? You guys know how hard it is. How hard is it to win 60% of your trades? Honestly, be honest with me. Bro, if I'm swinging at 30%, 40% win rate, but my RRs are 3 to 1, I'm chilling. I mean, you guys can see Rake Trades, for example. He does the same thing. He doesn't care about his win rate. All he cares about is his risk to reward. I'm using him as an example because he's a good role model to kind of look for, especially when it comes to risk to reward. You see me making 30K per day. You see me making 50K per day. I'm risking 15,000. I'm risking, couple, thousand. If you see me making 20K in one day, I probably risk 5 to 10,000 to make it. So if the trade would have failed, I would have had a minus $10,000 day. You have to understand what are your risk parameters. Where are you comfortable sitting at? If you're comfortable, taking 8 motherfucking losses in a row, but 2 winners, 5 to 1, 6 to 1 risk to reward, you will be profitable at the end of the day. It's probabilities and math. So when it comes to strategies, when it comes to taking trades, aim for 2 to 1, 3 to 1, because let's be real, it's easy to be 30% correct. You don't have to be correct every single time, just 30%, and you win. You win overall. You win. So the gist of the goal of this webinar is to help you understand that win rate does not matter, wins don't matter, losses don't matter. The real thing you should focus on as a trader is what is your risk to reward before you enter every single trade. Again, we go back to the whiteboard. Same scenario. Let me just plug in this fucking pencil so I can type. You can see whiteboard? You can see whiteboard or no? Okay. Risk management. So if I have a $1,000 into every single play, when you guys put a 10% stop loss, especially when you're trading SPX, you're immediately setting yourself up for failure, because you and me both know as soon as you enter an SPX trade, most likely you're either up 10% fast, you're either down 10% fast. So when you're looking for SPX, the ideal scenario to go for, this is how I do it. I mean, it could be too much maybe for you. For me, it works. I go for a 30% stop loss. 30% stop loss, and I'm always looking to make around 60%. My risk is 30. So for example, in this case, I am risking $300 to make $600. From a risk to reward standpoint, this is a 2 to 1 RR. This is a good quality trade. If I was risking 30% and I took profit at 30%, again, this is risking 300 to make 300. This is a 1 to 1 risk to reward ratio. Again, this is okay. This is very okay. Why? When is this okay? When the market's shitty and choppy, I'm not gonna risk 30%, go up and down, up and down, up and down. Sometimes it's okay to take the 1 to 1 risk to reward ratio. If going into the play, you expect, a 1 to 1 ratio, scalping. This is what scalping is. People, when they scalp, they're doing 10% stop loss, 10% take profit. This is 1 to 1 RR scalping. This is totally something that's normal. Sometimes you're in a trade, you say you want to risk 30%, it goes up, 10%, it goes down back to break even, it goes up 15%, then it's back to break even. You can sell it at break even. It's okay. The risk to reward ratio, of this trade, of this contract that you chose, didn't work out. You don't have to wait for the minus 30, you don't have to wait for the plus 30. If it's not working out, or you see some choppy action, or you entered late, you can sell at 10% or 20%. Because that sometimes, you're not always going to be right on the spot when you enter. So that sometimes fluctuate. But as long as you look for a 2-to-1 RR in the long run, you are solid. Because in the long run, you have to make, 40% of your trades profitable. If you're risking, where did the fucking whiteboard go? If you're risking 2-to-1 on every single trade, you think you can be correct just 40% of the time. I bet you here, everybody in here, there's like 70 people in here. I know for a fact, if you look at your win rate, a lot of you guys would be sitting at 40%. I know for a fact. Some of you guys even less. If you're the type of trader whose win rate is absolutely terrible, focus on 2-to-1 RR. 2-to-1 RR in the long run is always going to be better for you. Again, if you want to focus on 1-to-1, 3-to-1 RR, again, then you need to be right 30% of the time. 30%, correct? Is that what their papers told us? Yeah, 30% of the time. What about scalping 10 to 20% profits? Feel better and put a stop loss and profit and wait for the 2-to-1, 3-to-1? 100%. 100%. But if your trades are always stacked at 3-to-1, for me, I'm using a 30% stop loss. I'm looking to take profit at least at 60%. Now, I will take profit 30%. I will take profit because it's a 1-to-1 risk to reward. I risk 30% to make 60%. Now, there's one thing you have to understand with risk. Let's say I enter a trade here at $1, okay, and I have a SL at 0.70, okay, and if my SL is at 0.70, my ideal take profit should be 1.6, correct? So 1.6, sorry. So I'm risking 30 to make 60. Now, if I take this trade and I take it at $1 and the drawdown for it is 90, so it goes down 10% only. We've sized it. We've sized for 30%, but in this case, it only went down 10%. When the contract goes to 1.2, even though you're sized for 30 to 1 for a 30, so your 2RR would be 1.6, but because the drawdown was only minus 10, at 2.1, you're at 2-to-1 RR. So you can start trimming at 1.2 because technically you're at 2-to-1 RR. The drawdown was only 10% when we entered the trade. Like for example, today in a video, I took a loss at like 2.7. My entry was 3.3. We were down. How much we were down? Like, I think it went down even more. Went all the way to 2.5 before going to 8. We were down 30%. So we had to go up to break even, then up another 60 for it to be 2-to-1. So I cut it. I didn't think it was gonna go. Shit, it went all the way to $9. From risk to reward standpoint, this is like, how much is it from a risk to reward standpoint? Went to $9. 900 divided by 330 minus 270. Fucking 15-to-1 risk to reward. It was a phenomenal play from a risk to reward standpoint. But again, I was wrong. And if you watch me trade or you're with me in VC trading, you see I'm wrong. I close and I go to the next one. The reason I close and I go to the next one, because I'm not worried about it. I'm absolutely not worried about it. I'm not worrying about it because my hit rate is here. 3-to-1. I could be wrong. I could take 10 trades, all of them wrong. All of them wrong. All 7 of them wrong. But 3 of them being correct, I'm green for today. So when you approach a trade from a day-to-day basis, look at how many trades you took. You took 2 trades today, both are red. The third trade you come in to take it, you don't want to scalp 1-to-1. You don't want to scalp 2-to-1. You want to look, okay, how can I make 3-to-1 so I can end the day green at least? Because I see a lot of people, they take first loss, second loss, third loss, they're going all in to make 10%. If you sit there, you wait, you analyze the market, you see what opportunities you have in front of you, there's hundreds of fucking opportunities. Today, hundreds of setups in front of you. You sit back, you realize, okay, it's a bit too far for me. Let it come down to where it fits my risk parameters. Let me take the trade, add my stop loss, add my take profit. If it hits, it hits. If it doesn't, you followed your rules. Because it's a probabilities games, because it's a risk to reward games. If you're wrong, but it's equivalent to your risk parameter rules, you did nothing wrong. You took the trade, you put the stop loss, you lost. Accept it. No one gonna win 100% of the time. If you see anybody tell you, oh, I win 100% of my trades, they are lying to themselves and they are lying to you. You know, be self-aware, understand it's okay to lose. You're gonna lose whether you like it or not. At least if I'm gonna lose, have a higher probability chance of being able to make it back through risk to reward ratio. Which brings us today to today's trade. Let's go over today's trade. I don't want to take too much of your time. Just a quick recap of today's trade, and then I'll show you the risk to reward standpoint behind it. I'll show you the entries, the exits, and I'll show you from a chart perspective what we saw, from a tape perspective what we saw, and everything. Just a quick kind of recap. But before I recap, I want to always explain what I look for from a risk to reward standpoint. I want you to understand that coming into the day, I don't give a shit about my win rate. I don't really care. All I care is, did I make money today or not? In the morning, if you were with me in the morning, first two trades, red, immediately right off open, 2, gone. Third trade, sat down, waited for the setup to come, established the risk to reward, how much I am willing to lose, how much am I willing to make, how much do I think I'm going to make, everything set. Let the trade do its thing. Let the trade do its thing. Let's go now. Questions? I have to put ego aside and sell for a small loss and move on to the next one. Can you tell us how you manage holding trades to the discipline and how levels are your SL and not P&L? Perfect. Let's do that too. One second. So many fucking vapes. I'm sitting on one of them. What's your strategy, bro? Read my tweets, bro. I use the tape. I use the time and sales. I use the level 2. I use dark pool. I use charts. I use gamma. I use Vanna. I post everything so people can see. I have nothing to hide. I even post my entries and exits with the timestamp. So if you want, you can go into the option book and you can verify everything. Okay. So which trade are we going for? Oh, today is actually one of my second biggest trades for the month. Okay, let's talk about today's trade. Let's talk about today's trade. Where do we start? Following all your entries and exits, we will profit every month. You know, it's all about the risk to reward, brother. Give us more examples live. As well. Will you be on VC tomorrow and Thursday to give us more examples live of your risk to reward strategy? I do it every single day. When I'm in the play, I explain, like, look, this is my risk. I show my screen as well. So this is my risk. This is what I'm looking for from a reward standpoint. And you know, if it hits, it hits. I'm wrong. I'm wrong. For me, setting my ego aside and understanding I'm wrong is a normal thing. Mr. Trade, do you have a question, bro? What's up, man? Before I start the next section, what's up, bro? Mr. Trades. Question, bro. Chat. Can you go live on free Discord chat tomorrow? I don't know, bro. I gotta check with my partner. I just do what he told me to do pretty much. Where's Mr. Trades? You have a question, bro? Mr. Trades, going once, going twice. All right, on to the next topic. Okay, so today we're gonna discuss SPX display. Okay. So okay, can you see my trader link bot thing? You can see trader link, Greek exposure. All right, so this is our new data platform that we have, pretty much as gamma, pan, exposure, dark pool, time and sales in real time, top market orders, unusual options. You can customize it however you want. You can add whatever you want in this case. But if you're not signed up for our beta, we're launching our beta next Monday. Make sure you just drop your email, username. It's free again. We just want people to test out the product, see if it's useful to them or not. But I want to go over today, especially in the top 10 market orders. Oh, fuck, they updated. Okay, they updated, so I have to go into my Twitter. Okay, when I was making the trade, this is updated now because it's currently 4 p.m. But when I was making the trade, it was here. This is what the orders look like. As you can see, the top market orders this morning coming in on SPX and SPY is holding the floor right here at 450.84 towards 451. As you can see, the size is pretty aggressive right here in this particular case. So once you see sizes like this, pretty aggressive, 184,000 shares at 450, multiple orders coming in. These are market orders. You don't even see them on the level 2. These are only come up on the time and sales, and they're hard to spot when you're trading in a live format because they come in very fast. Your eyes, sometimes you can't really see them. So this is one of the reasons I had Mitchell kind of code this up. So when they come in real time, I can actually see them. I can understand what I'm looking at. Because when it comes in the tape so fast, personally, sometimes it's so hard to read, you miss a few things. But as you can see, market orders all morning, pretty much solidifying the floor here at 450. When we go back to the chart, flip-flop between the chart. When we go back to the chart, we look at SPY. Let's remove everything so you can see. So as you can see right here, 450, huge level. And all morning, the levels that were being bought up was 451, 450.15, 451.8. These are large market orders, pretty much solidifying the support or the floor right here. So if I were trading this, for example, from an SPX standpoint, and I look at it, okay, and I see, okay, the floor here is at 450, and let's say my entry is going to be this 450.8. This is where the last kind of market order comes in. Very aggressive multiple orders come in at 150.8. This is where the biggest order actually comes in for the day at 9:30. It comes in, as well as 8 p.m. last night. So let's say I take a trade right here at 450.8. 450.8. Okay, this is my entry. From a chart perspective. So my entry is 450.8. Let's say my stop loss is 450. What am I risking here? Come on, someone tell me, how much am I risking? How much am I risking? What is my risk in dollar amounts? Good job, Scott. My risk is 80 cents. So risk right here is 80 cents. Where should my reward be at least? Where should I look for my reward to be at least if I'm risking 80 cents? So if I'm looking for a 1-to-1 risk to reward, my first take profit is going to be 41.61. Right here, I'm at 1-to-1 RR. This is from a chart perspective. From a 450.8, from a 2-to-1 perspective, you want to look at 452.4. 452 or 452.4. This is a 2-to-1 RR. So if this is my risk right here, okay, just color code it so it makes life a little bit easier. If this is my risk, put that in red for you. This is my 1-to-1 reward. Put it in green. This is my 2-to-1 risk to reward. Now this is on stock. It's not on. It's on option. It's different, but I just want to give you the idea just so you understand. So my risk here is 80 cents. Take profit 1-to-1 risk to reward. Take profit 2-to-1 risk to reward. So keep in mind, 80 cents risk on SPY is equivalent to 8 points on SPX. So in this case, you know, when we're looking for an option play, you're risking 8 fucking points. You and me both know if you're wrong that those 8 points, you're gonna be down like 50%. So in this particular case, the reason the reward is very high is because I'm risking almost 50% on the play. So at least I should be making 100%. I'm going down 50%. Like I'm seeing minus 500. When it goes into the green, at least let me see plus 1,000, you know, or whatever the number may be. But you have to look at it from a risk to reward standpoint, always from a risk to reward standpoint. If you look everything from a risk to reward standpoint in the long run, life will be easier for you. I promise you. I used to not look at things from a risk to reward standpoint. I would look at things from oh, I'm gonna make so much money if I follow this guy who told me to buy this. If it does not match your risk to reward, don't fucking take it. If you do not know what the risk to reward is, don't take it. But looking at today, simple. I'm gonna show you in risk management terms as quickly as easy as possible. Here's the entry. The entry is, let me get you the exact fucking entry at the time. The time of entry. 45.50. Okay. At 10:11, we entered. At 10:16, we also entered. And again, at 10:33. So the last entry was at 10:33. So from here to here is where we started entering. So you can say average entries around 45.30. So again, my risk is here. This is my risk. My take profit 1 was here. If you look at the recording, this is exactly where we sold the first time because it followed my risk to reward plan. My second take profit was right here. And then the last take profit, whoever had runners, you know, we took them right here. So how do you hold something like this? Well, when I don't know if I should hold the ticker or not, I like to use this. I like to use 9 and 21. When I'm unsure where the market is going to go, 9.21 on a 5-minute time frame, not on a 1-minute time frame. On a 1-minute time frame, you're going to have a really hard time holding. But as you can see, as the stock's trending up, in an uptrend or in a downtrend, what does it mean uptrend? Higher high, higher high, higher high, higher high, higher low, higher low, higher low, higher low. We're going straight to the basics. This is as basic trading as it can be. So my entries here, my stop loss is here. Why did I continue to hold this? Look, simply, if the imbalance on the tape was not enough, the top 10 market orders, if the dark pool orders on the tape were holding the floor at 45.15, holding the floor at 45.26, based on the imbalance posted in the tweet that you just saw, holding this, look at it on a 5-minute. It never went under the 21 EMA. Here it went under for less than 1 minute and came right back up. When you're looking at it from a 1 minute standpoint, it's obviously it's hard to hold because it keeps crossing back and forth, back and forth. But when you're looking at it from a larger time frame perspective, you're looking at it on a 5 minute, you can see the whole time you shouldn't have even sold anything. Even us selling early, bro, because but look at it, it's just going up. It's using the 9 and 21 as support and resistance lines as it's going down. If you were to get stopped out or get or be out, it would have been right here at 45.30, at 45.40, which at that point you would already be at a 3-to-1 risk to reward. You would already be at a 3-to-1 risk to reward, even if you got stopped out right here, because your entry is at 45.30, your stop loss is 45.26. So even if you got stopped out right here, you can jump right back on right here and ride it all the way up. How do I hold? I simply go to the larger time frames. I'm looking at the larger time frames. This is the 15-minute chart. You see clean 15-minute chart. It never even went under the 9 EMA the entire day. The whole time it's just holding up. You look at larger time frames. Same exact thing. The whole time it's just riding the 9 EMA as it's pushing to the upside, and it's easier to hold. Of course, it's hard to hold when you're looking at the 1 minute where it's going. It's crossing under, then it's pushing back up. It's crossing under. Oh, it's going to go down here, guys. Let's take puts, pushing to the upside. The momentum is helping you from a chart perspective. You look at a trade from a chart perspective, it's clean going to the upside. You look at the trade from a market perspective, where you're looking at the top 10 market orders of the day in the morning. They're solidifying support. They're coming in. They're buying. You look at these numbers are not a little bit. Do this on your phone, literally. All you got to do is 108, 489 times 450.5. 450.5 times 108, 489. This is a $48 million order. They're coming in, simultaneously off open, solidifying support. Like, look, man, I got support right here for you at 450.5. I'm holding the line right here. If it falls under 450.5, which let's see if it did today, which it never even fucking did. Maybe we went under 450. If it falls under 450.5, then in my case, when I'm looking at calls today, this was my floor. And as you can see, slowly as the day starts to continue at 10 o'clock, at 10:30, where we're starting to enter, another floor is coming to form. Like, look, we have your back at 450.5, but right here, I'm also adding another support right here at 451.48. Looking at this chart, you probably won't understand anything unless you read the tape. I read the tape. I don't really care too much about the chart. I'm looking at the tape because the tape is the only real-time indication of what's going on in the market. My EMAs are lagging, my candlesticks are lagging, my tape is not lagging. It's telling me what's happening in real time, how much money is going into this position in real time, how much money is going in to build the support in real time. So as you can see, they're solidifying my support right here at 450.81. Now, let's go. What is the dark pool orders? We look at the dark pool orders as well at the same time, holding those same levels, 450.8, 450.8, 452.2, 451.81. I'm literally using these levels right here you see on the dark pool, because look at the fucking value of how much money is being spent at this level of orders being filled at that level. So I'm using these as pivot levels. So if it falls below, I'm going to assume these are sellers and it's going to push to the downside. I'm using it as kind of a stop loss where I put my stop. Now, I will put a buffer. I will put a buffer of 10-20 cents. So like if I see an order at 450.86, that's, I don't know, $100 million order, I'm going to put my stop loss at 450.66. 20 cents buffer, just in case it comes in, just to wick some people out before it pushes back to the upside. So I'm using these levels right here you see on the dark pool print. It's kind of pivot levels for my entries and my exit, especially when I see a large number. Look at this number. 11 million. When I see these large numbers coming in, solidifying the support, for me as a trader, I'm okay with buying at 452 because I know these guys right here are holding the floor. When you do support resistance on your chart, where you draw a line on your chart, you're drawing a line because of these orders right here that you see right in front of you. Where are you getting the line from? Buying pressure or selling pressure? This is the buying pressure. This is the selling pressure. You see it right here in front of you. So in today's trade, seeing all this right in here in front of me, looking at the momentum of the market, if you look at the momentum of the market this morning, everything was green except tech. As soon as tech started to go, as soon as Meta went, Microsoft went, Nvidia went, I was like, okay, now this is a trade you want to hold, because not only was SPX trending to the upside, but they were trending to the upside without tech. Tech is 26% of S&P 500's holding. So if S&P 500 is up, but the entire tech market, the entire tech sector is down, once the tech reverses, you'll see a Rippy like no other. So that's why you have to pay attention to the sector around you. Today, immediately I'll open, like, dude, why the fuck is it going up? The top 10 companies in S&P 500 are going down. Why is SPX going up? You open the chart, you look at Exxon. Exxon is ripping. The entire energy sector is ripping. You'll open the heat map. You see the entire healthcare sector is lifting. Look at UNH today. UNH went up like 30 points, 17 points. That whole sector has holding in the S&P 500. So as soon as tech started to show signs of reversal, I knew the strength was coming in, because the top 26% of the market and started off red, but the market was green. So as soon as those reverse, everything just goes up. It doesn't take, you just put 2 and 2 together. Okay. Anybody have any questions for me? I wanted today to do a quick small recap, just to kind of show you a few things, literally. Again, if you, Nick, can you post the link for the beta sign up if anybody wants to sign up and hasn't signed up? Yeah, just post it right here, and if you want to sign up. So if you're wondering what the link is that I keep posting, it's simply honestly, I want to stress test the fuck out of this website. The more people I have on this website to stress test the fuck out of it to make sure it works in real time, the better for me. Again, if you don't use any of the gammas, it's all good to me. It has dark pool, time and sales, unusual options. If you like to use flow, it's free. All I want you to do is test it out. Tell me how you like it, how it feels, and you can set up the setup however you want it. This is how I have it set up, because I'm mainly focused on time and sales. The reason I like it a lot is also because I can read the time and sales in terms of value. Like for example, 4.11. Some motherfucker spent $510 fucking million at that level. You want to watch this level going into tomorrow, 454.18. Look, this is big boy money right here. If it goes below, they probably sold it. If it holds above, it probably went long. And you can use this as a stop loss. So you manage your risk to reward before going into the day, before going into the play. Yeah, that's the link right here. NB Breezy just posted. Access, I believe, on Monday. Does anybody have any questions? 81 people. Thank you guys for joining. Truly, I wanted to keep today like short and sweet. Just kind of give you the gist of everything. I hope it helped. So ask me questions, whatever you want. My pleasure, man. How do you gamma and Vanna? So with gamma and Vanna, personally, I currently have 2 masters of gamma and Vanna. We are going to release an entire course with that's included with the trader link, how to use it and everything. Would you ever do trade copier? Personally, I would never do trade copier for the simple reason is my risk to reward is always going to be different from yours. And I don't want to ruin my brand name. You journal your trades. I journal every single trade. I use Twitter as my public journal. Can we get a oh yeah? Oh yeah. Like that? Question on top. Sandeep. You take minimum option price because of delta and gamma, so you don't wait for too long when market is slow grinding. You take minimum option price because of delta and gamma. Honestly, when I'm trading, bro, when I'm looking at the option Greeks, I don't look at the option Greeks too much because I know how they move by trading them on a daily basis. So I don't really look, oh, the delta of this stock is 0.3, the gamma is point. I'm not really trading based on delta and gamma. Post more IG content on YouTube. I'm working on it, man. I hate the camera. Like this is easy for me to talk because the camera is not focused on me. I mean, at this case, it is, but it's hard to talk. Which broker do you use? I'm currently using Fidelity Active Trader Pro. I'm only using it because I'm banned on Interactive Broker and I'm on TD on IBKR. How does your Discord work? When I join, it's completely different. What do you mean, Elias? I don't understand. It's a good time to join because it's a good time to join because what? Or wait until earnings. It's really all up to you and your risk to reward again. Are you banned because you were making a lot of money? I don't know. I withdrew a bit too much on my Interactive Broker account, and then I took a break for Ramadan. When I came back, it was only closing. I have a hard time finding consistency. Any advice? Focus on your risk to reward ratio. Focus on your risk to reward ratio, and also focus on focus. If you're having trouble finding consistency, is because your win rate is shit, most likely. I assume you lose 30% of your trade, you lose 60% of your trades or 40% of your trades, you know. So if you're losing a lot, focus on higher quality risk to reward setups, in my opinion. I struggle with execution and psychology. Any advice? Scared money don't make money. We have a lot of chart traders, sideline traders who have the best analysis, the best scenarios, the best everything, 10 out of 10. But when it comes to execution, they make no money because they don't put money where their mouth is, pretty much. But the best thing you can do if you're struggling with psychology is to take it slow, to focus on risking down, size less. By the way, just to let you know, I want to tell you something. I want to ask you one question. Okay. Let me go back to this here real quick. Just one question I have to ask. $1,000 with a 20% stop loss in a trade. If the trade goes wrong, you lose $200. But also, if you put $200 in the trade with no stop loss, if the trade were to go to shit, you also lose 200. A lot of people love this one. Oh my God. Oh, I'm in. I have a stop loss at -20. I'm looking to take profit at 40. You do understand, if you do this one, you can hold the trade. You can actually hold the fucking trade because you're sized for 0, And you guys know with SPX -20 is only good if you pinpointed the exact entry. But if you can't pinpoint the entry or you're having trouble, size your stop loss. That way, from a psychology perspective, your emotions are not playing you, oh, I have to sell. It's up 10%, it's up 20%, it's 2-to-1, I have to sell. You're letting the trade really just do its thing. You average down on your trades. Usually, I scale into my trades. So I'll buy like 30 contracts, then I'll buy 70 contracts, and then I'll buy 100. So that'll equal 200 contracts. With respect to risk reward ratio, and if you were to put 2-to-1 on a $1 contract and it went up to 1.2 and then to 0.7 and back down to 1.1, is it staying in 1.1 for a while? Do you think I should still wait for a 2-to-1 play? Again, don't worry, I understand, Donnie. The 2-to-1, only if the play is still valid. If you're looking at everything and it does not make sense anymore to hold this play, but you're sitting at a 1-to-1 risk to reward, or even if you're sitting at a less than a 1-to-1 risk to reward, the most important thing you have as a trader is to manage risk. It's not to lose money or make the most amount of money as you can. It's to manage risk. So always choose managing risk overweighting for a 2-to-1 play to come. You know, sometimes you really you go up 20%, you go down 20%, then it stays there for minus 30%, and then it pops back up, break even, and it goes plus 10%. You know, if you're mentally tired from holding it, oh, fucking leave it, bro. Take out. You're managing risk. You look through my threads, bro. You'll see I enter plays, 100K plays, and my loss is $200. If I had held the trade, I would have made 300K. But at that point in time, after holding for a large drawdown, mentally I couldn't hold it any longer, so I chose managing risk. So you don't always have to wait for that 2-to-1 risk to reward. You don't always have to wait for that 3-to-1 risk to reward. If the play is no longer valid, or you feel mentally tired or mentally drained, cut it. Doesn't matter the risk to reward on that. You trade stocks in a play, like either have news, technical catalysts. I've noticed I'm only good as the stocks I trade. I've tried trading SPX every day. It hasn't worked for me. Personally, I stick to a basket of tickers. I mean, I'm gonna show you the reason why I trade SPX. I'm gonna keep it 1,000 with you, bro. Like, if we go to like this month, the reason I trade SPX is this. There you go. This month's SPX, I'm up like 249,000. It's easy for me to trade SPX. And you can see, look, there's losses. There's not only wins. You can see there's big ass losses in here too. It's not only wins. See this loss right here, 40,000. You see them wins, 150,000. I don't post every single win, just to let you know. Some of them are too big to post. I don't post them. But you see them wins, you know, right here 150,000, right here 70,000, right here 50,000. I don't post all these wins just because I don't like to, but the reason I trade SPX is because I'm good at it. I can make money doing it from a risk to reward standpoint, from a probability standpoint. I can make money. See, today 63. This month, you know, it works for me, you know. So I trade SPX because I understand how it moves. I understand the premium behind it. That's the reason I trade SPX. You know, I don't trade SPX because it makes me a lot of. I trade SPX because I know how the premium moves. I know how the stock moves. I know how the implied daily move on it. I know the ranging of the premium. I know my risk management in check. I have everything set up, you know, multiple scenarios per day, where I'm going to go long, where I'm going to go short. And I trade back and forth, back and forth, back and forth. You know, I simply trade back and forth. It makes me the most money. I just literally do it every single day. You know, it's my bread and butter. For most people, it doesn't work. But let me tell you something. It took me 4 years to understand SPX. 4 years of straight losing on SPX to be able to, okay, I think I have a way to trade SPX. But focus on a basket of tickers. My basket, SPX, Microsoft, Meta, AI, NVIDIA, Apple, Snow, Upstart, Amazon. Where else? Where's more? Tesla, Microsoft, Google. Those are my baskets. Those are my basket of tickers. I watch them every fucking day. Sometimes I don't even trade them. But because the weighting of them is so big in SPX, Apple, for example, is probably the shittiest ticker to trade. I watch Apple every single day and know all the levels with Apple because it's 10% of SPY. Apple moves like shit, but if it goes up 1%, SPX is going up with it, you know, because it's 10% of SPY, almost 10%. So do I trade OD? Yes, I trade ODD. I usually have a stop loss at 20 to 30, but I take profits at 10 to 15. Any suggestions on what should guys, what should Mo do? What should Mo do? He's not even using a 1-to-1 risk to reward. Mo should focus on a 2-to-1 risk to reward. If your stop loss is 30% and you're taking profit at 15%, you will never be profitable. You will never be profitable. You're not even at 1-to-1 risk to reward. You're not at, you cannot be profitable. It's just impossible. Bro, so you're risking 30, so you're basically risking $300 to make 100. You're doing a 1 to 3 reverse. So Mo, what you should focus on is, if you want to take profit at 10%, have your stop loss at 5. At least then it's a 2 to 1. You know what I mean? So when Mo here is asking how should he trade, he's using 30% stop loss with 10% take profit. You're never going to be profitable in the long run. Never. Because you're going to lose more trades than you're going to win, and you're losing 30% on your losses, but you're making 10. So it doesn't make sense from a risk to reward standpoint. Either size the fuck down, size down. It's okay to go down. If you're usually into the 1000%, Mo, I'm going to use you as an example. Sorry, my brother, but today you're going to be the case study. Come here, Mo. Well, what's your sizing, my bro? Come, let's use you as an example. It's okay. It's good to learn. Sometimes you got to use people as examples. Dollar amount. Give me dollar amount. Don't give me 1 to 2 count. Dollar. How much you spend on a trade usually? So Mo is spending $100 on a trade. So in your case at the moment, so you're risking $30 to make 10. X. Should not do that. That is very, very bad. And in your case, if you're risking $30, at least, we can go slow. We don't have to jump immediately into the 2 to 1. Understand mentally, to jump from whatever the fuck this is, negative risk to reward. I even know how to fucking do the math on this. It's a 1 to 3 reversed. We don't have to flip immediately to 3 to 1, 2 to 1, 1 to 1. We can go immediately to 1 to 1. You should focus on, let's see, if I'm risking $30, let me at least make $30. At least right here, I'm at a 1 to 1 risk to reward. And in this case, with a 1 to 1 risk to reward, I need to win 60% of my trades. So if you, whatever this is, if you're looking for 30%, 10%, this, get it out of your list. This is X. This is bad. This is no. This is no. Gradually, we go from 30 to 30, 1 to 1. Then we can go from 30 to 60, 2 to 1. At least here, when I'm doing 2 to 1, I only need to be profitable 40% of the time. I need to have a win rate. In this case, 60% of my trades have to be green. I'll be profitable. 40% of my trades have to be green or be profitable. Instead of risking 30%, in your case, you should do risk 10, because your account is very small. You're trading with $100. 10. At least now you're at a 1 to 1. If you're risking 10 to make 20, at least now you're at a 2 to 1. Focus on this. Risk 10, make 20. Risk 10, making 20, you have to be right 4 out of 10 times, and you will be green. Every trade you enter, if you put -10 stop loss, -10, +10 take profit. Again, you're dealing with smaller numbers, so the numbers is going to be a bit different for you because it's so fucking hard, because you're risking $10 right here. I have the same issue as Mo. If I enter a play and it goes down, then break even, and I'm like, if I can at least get it some green, that is better. I guess I go out with a sucker mentality. No, that's if you're going in, okay, and you put your 20% stop loss, -20, so I'm gonna lose $20, and you see it go back to break even, goes back to break even. So now we're at break even. Then it goes again back to -20%, and again back to break even. You can get rid of it at break even. It's a trade that didn't work out. You followed your rules. You had your stop loss. You didn't get stopped out. It's a trade that's not working. It's not doing its thing. Take it out. You don't have to hold every single trade to 1 to 1 or 2 to 1 or 3 to 1. I'm just saying, in the grand scheme of things, when you're looking at something from a long-term perspective, from a monthly perspective, from a weekly perspective, from a yearly perspective, you want to look at something where, I could potentially, how am I going to make money in the long run? Risking 30 to make 10, you will never make money. You will never make money. This is never do this again in your life. You will not, if you trade for 100 years, you will never be profitable unless you're winning literally 100% of your trades. Your win rate is 100%. You can do this all day, all you want. But if your win rate is not 100% and it's low, this is bad. This is like cancer for your portfolio. Okay, Modo, we come to class, we learn. It's okay if we use you as an example. This is good for you to learn. At least you're getting, this is like a one-on-one mentorship for you. All right. Knowing where to cut trade is more important than 100% win. Correct? 100%, brother. You're on point. I cannot do any more challenges, Chris, because my mindset is currently wired on trading these larger accounts. So I would have to take like a 1 month prep session before I could do a challenge. And in this point, the market is so hot, my brother. The stocks are ripping and going up. What you're seeing is kind of like an opportunity of a lifetime. So for me personally, I want to take this opportunity of a lifetime and milk the living shit out of it. I want to milk the living shit out of it. Do I have any open swings? Yes, I do. I think so. Let me check. Yes, I have 2 swings open. One is up 40% here. Show you. Open swings. This is what I have open. Let me just block out. Where the fuck did it go? Fuck it. I'm gonna just show my account number. I don't give a shit. This is what I have open. I have a Tesla 300 call. They're up like 50%, 70% here, 5.5. And then I have Amazon 140 call, currently down. It's down 5%. This is up 40, this is up down 5. By Amazon, I'm playing the earnings run up. Again, it's light size. You see, it's sized for 0. Like if this trade, it's a starter position. There's no stop loss on it. It's sized for 0. You're holding Tesla after ER. I gotta see how much we're up now. I've been keeping the position sizing pretty solid on it. It's up 7,000. Probably sell half, hold half, something like that. How was my profit this year? It's up there, my brother. I mean, this month on SPX, like I told you, I'll show you the monthly. This is just this month, SPX. So it's up there, my brother. It's good. Do you do any hard stops on day trading? If it fits my risk parameters, 2-to-1 risk to reward, then yes. It all depends on my risk to reward. How much do I put into how much should I put into a 30K account? This was actually a 30K account 2 months ago. It's currently 500,000, but it's really up to you, bro. Up to the risk to reward. Are you in competition with Rake trades to see who can make more? No, bro. I love Rake. Rake is my brother. You know, we came up together, so I love Rake. No competition between me and him. We text a lot and talk shit about other traders sometimes. How do you find gap fills? Do you have a scanner? I don't have a scanner, bro. No. This is my scanner. My eye is my scanner. How are you so detached from money? I do have a large bankroll, I would say. So I'm detached from money because this is probabilities game. This is a probabilities game. I know I'm going to, let's say, lose 40% of my trades, make money on 60% of the trades. I focus on my 60% that are winners, and I maximize them through 2-to-1, 3-to-1 risk to reward ratios. That way, I'm chilling when it comes to it. How'd you get into trading? Who's your mentor? Started trading when I was 18 years old. I don't really have a mentor. I guess my friend, we traded together. He taught me how to trade. Then when we both got liquidated, he stopped trading and I just continued. I'm currently 20. I'm about to turn 27 in 5 days, so I've been almost trading for like 9 years now. I turned 27 on July 23, and I started at 18. I started with Bitcoin. My first thing I ever bought was Litecoin, Bitcoin, Ether. Really good. 2016 crypto, yes sir. Yes, money. How do you not get bored after being home for so long? One thing I hate about trading. I go to the gym, bro. I go to the gym, and how often do you pay yourself? The past 2 months, I haven't been paying myself as often as I used to. I used to pay myself at least twice per week if I'm green. I used to withdraw every single day. This couple months, I've been switching up my strategy because I find it easier to manage risk when you have a larger portfolio. How do you get your stress managed? Working out, bro. I play kickboxing and I just throw it on the bag all day long. Do you have any macro view about the market right now? Chainsaw, I'll give it. I'll be as completely honest as possible with you. I do not give a flying fuck what happens next week or the week after. I only care about what happens tomorrow. I literally only care what's happening when I enter the trade and when I exit the trade. If I'm looking from a macro point of view, look at every economist you see out there. I'm an economist. I have a degree. I have a poorest people are economists. They're always wrong on the macro view. It's hard. It's very, very hard to look at a chart and say this is going to 5,000, this is going to 0. But it's pretty fucking easy to look at it from a day-to-day basis as opposed to a 2 to 3 year basis. At the moment, stock's going up, I'm riding with it up. When they go down, I'll ride with it down. You still use a stream deck? It's actually right here. Stream deck. Right here. I haven't used it, I'm being honest with you. Fidelity's shit, so it's hard to use it with Fidelity. But Interactive Broker, I used to use it. Fidelity, I can't really use it, bro, because the platform is like it's like your grandfather's platform. It's so old. So it's shit. When's Mastermind 2.0? Dude, I was supposed to do it like 2 months ago, but I've been just kind of focusing on my own trading. But I will do one soon. Maybe taking option Buffett calls. Yeah, I've been slacking. I have been slacking. Is it possible to follow your trade exactly like since you are? Is it possible to follow your trades exactly like you since you aren't live the whole time? Yes. Yeah, I type them. That's my perspective. Once you develop a long-term view, you become biased. Perfect, brother. Yes, I just manage risk according to my account. Here, Chainsaw is in the chat. He told you can. I prefer your alerts to confirm my trades. Appreciate you, brother. Swings, you do weekly? Swings depends, bro. Honestly, swings, I do starters. I do a lot of starter positions, tester position. I usually call them like pilot positions. And do you trade solar stocks? Man, I bought ENPH 170 call last week and we got stopped out. And then seeing it at like 190, I'm kind of like pissed. So I have not I have not traded solar stocks. Glad you're doing good, baby. I'm sick and tired of seeing these foolers that don't show losses. I mean, I like to be as transparent as possible. I'll post every day the winners, the losers. I actually didn't post today's win. Today I'm up 49,000. I only posted 31,000. I didn't feel like doing a recap. How often do you have red days? I have red days. I have a lot of red days intraday. But overall, the last red day, I think it was, I don't know. Let me check. The last intense red day I had, I believe, was the 13th. 2-3 red days I had this month. You can look in my Twitter. You can see all the red days. I literally take the trade, and I immediately recap. You think Tesla would run up like NVIDIA ER? Remember you took that 42K profit. I mean, I love Tesla. When it comes to Elon Musk, I'm pretty biased because Elon Musk makes me a shit ton of money. So I'm pretty biased when it comes to that. Yeah, he's made me around $100,000 this year. So daily routine post, brother. I swear to God, I wake up, bro. I wake up an hour before market open. I prepare myself. I trade. I go to the gym, and after this, now I don't do anything. I sit with my vape and my phone, and I scroll, and then I go to sleep. We go over your new Gex Vex tape strategy. Yes, Kent. It's gonna take like 10 classes probably, but I have guest speakers gonna come in to the Discord and show you all about it. At what dollar amount was your account when you know you could do this full time and live off without any additional source of income, and did it work out from there? What dollar amount? When Interactive Brokers had instant cash settlement, all I needed was $20,000. Do you ever trade futures or just trade up? I tried futures, man. I couldn't. The way they moved is just like, your risk to reward has to be exactly on the dot. With options, bro, you can risk different. Some trades you size for zero, other trades, you size heavy. So it's easier to play with risk management when you're doing options, because I can size all my plays for zero and have a normal day. If I take 5 trades, each one have $500 in it, it'd be normal. With futures, gotta have entry done, risk done, exit done. I don't like it, bro. It's too slow for me. Doesn't even like, I'm a degen a little bit. I like when this shit goes up fast and down fast. What do you think a realistic daily profit goal with a 30K account is? About $1,000, 1,500. Really? 500 is good too. Brett, does anybody have any questions for me? Nice class, 72 people. Y'all stayed the whole time too. Appreciate y'all. At what year of trading did you decide to go full time, no outside income? Brother, I've been full time the whole time. I was trading when I had $100 in my pocket, bro. How'd you get away with trading in the beginning when you couldn't afford to pay rent and shit like that when you needed a job? When I would blow the port, I was an insurance sales agent. Simple, bro. You knock on doors, find an old man, sell him some life insurance, make some money, reload the port. That's how I did it, bro. Risk to reward. I did insurance sales. I do have, by the way, I have a master's degree in finance. I have a bachelor's degree in finance. I've never used it once in my life. You live with parents? I take care of my parents. I don't live with them. I live alone here. I live with my brother, actually. You cute bastard, man. For the son was probably wild. I've had my fair shares of up and how much did I lose before profiting? Bro, I couldn't even count. I'm gonna be straight up and honest with you. I'm not gonna tell you, oh, I deposited $5,000 and then it became a millionaire after. Brother, I was losing every single month. Reload, 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 reload. Every single month. My brother trades now. Doesn't do anything. Do you run more classes? I'll try my best, my brother. You said you're worth one million last time. I say double that now. I wish, but no. When does trader link come out, brother? On Monday, I think we're gonna do the beta test. You live with your parents when you start trading, brother. I'm Arab, bro. We will live with our parents till the day we die. We take care of our family till the end. Do you trade your long-term forward or just buy shares? No, I don't. I have a couple of shares here. I don't trade it. No. Yesterday I saw a discount for joining Discord, but not there anymore. Anyway, we can get that for today. I want to join. Is Mitchell here? Yo, Breezy, take this guy's like DM this guy on Discord. This guy Chris, DM him on Discord. Chris, find Rippy Breeze DM on Discord. You invest in real estate and other things. I do, my brother. I do. I hate real estate, if I'm being honest with you, but I do invest in it. Awesome. Do we have anything? All right, more money. Take care. Any chance you do a trade like Amazon the other year? Man, Amazon has been shit since the split. It's been shit since the split. This is my first Amazon trade I take all year long, if I'm being honest with you. They have earnings, so I might as well play the IV run up. But can we get a recording? Yes, as soon as I press end, recording will render. Mr. Trades, you have a question. What's up, my brother? Can I get a discount for the Discord? Give me 1 second, bro. Give me 1 second. Give me 1 second. Doesn't answer the phone. Uh, 1 second. Hey, bro, can you do a 50% discount coupon? Call the coupon 123 Rippy. And yeah, I think that's good. Just so I can tell them to put that in the checkout. Okay, 1 2 3 1 2 3 Rippy. Okay. I told him when he does it, do in the discount code 123 Rippy, and it will work. It was 70%. 70%. Where 70%? Habibi. Rippy Global? 70%? Where? Where? There's no. Oh, it's free. The academy, that's free, bro. Academy, mastermind, academy, newsletter, all free. Yes, you speak. I want to give thanks to Breezy and all of you guys. All right, my brother. I'm gonna let you speak, bro. But if you say anything bad, I have to kick you. But here you go, bro. Mr. Trades, the floor is all yours, brother.
Hey, how you doing, Hassan? First, I just want to say thank you so much, brother, for hosting this Zoom session. You're someone that I look up to, so thank you so much for this, and also shout out to Breezy for coming in and always with the goated academy sessions. He's just an amazing teacher overall and easy to understand. And for anyone here that's what's it called, not consistently profitable or just want to learn more, man, just tune into those academy sessions. Like they're really good, and Breezy does a really excellent job of explaining them. And yeah, man, this is just amazing. You know, like I really appreciate you for doing this. Like it's crazy, man, because like your journey, like I found you in like 2021, and following you guys been ever since. Like you know, along with rake trades and other, it's just amazing to see you guys just come up and stuff. And like it's just crazy, man. It's just like I can't believe like, I get to speak to you, man. It's pretty crazy, bro. Like
I
it's just
appreciate it,
crazy.
man. Thank you so much, truly. I swear to God, your kind words, like,
And also thank you for replying to my tweets. Sometimes I reply just to get some answers and questions, and it's been really amazing that you like take the time to respond, which like really means a
of course,
lot.
my brother. Of course,
And
my brother. I
thank you,
appreciate
sir. Thank you, Habibi.
Thank you for supporting
Much
me.
much more success the rest of the year. And yeah, man,
I
have a
appreciate
good
you
one.
supporting me, man, and standing by me. Thank you. I truly appreciate your kind words, man. That shit just made my fucking day.
Bro,
Thank you,
swear,
Mr.
bro, you're
Trades.
transparent with everything, brother. Like everything, your losses, your posts, like you're active and shit. Like you know, it doesn't get enough attention, man. Like it's crazy. But
No,
yeah,
good,
man, I
bro.
just want to
You know, whoever sees it, sees it. You know, there's a lot of fakers out here, but you know, if it's good, if it came to you, bro, I'm glad. I'm glad you get to see it and be a part of it. I'm glad you're a part of my journey. You know, to see that come up as well. So thank you for
yes,
that.
sir. Don't stop doing these, man. Don't stop whatever you're doing. You know what I mean? Don't stop, man. Let's level up. You know, like
I
the
won't
rest of
stop.
the
I
year.
got you,
And
man. I'm gonna do these recaps every day, bro. I'm gonna post them every day. I'm gonna be transparent as possible. You know, trading is a cutthroat business. A lot of people, and I mean, I'll be honest with you. I've never wanted to become a trading influencer. It was never in the books. It was never in the cards, bro. Even if you look at my name, RippyGod, that shit was a joke. Like it wasn't.
man,
It wasn't. It was a joke, bro. It was a joke between our friends. We're just fucking around. You know.
no, I'm glad you did, man. I'm glad you did, because like it's crazy, because I'm a new trader, and like looking up to you and seeing like your journey from like way back in the beginning, like it's just been amazing, like it's super inspirational, you know what I mean? So like seeing what's possible and everything, it's just like holy shit, you know what I mean? So and you know, also being from Middle East as well, it's like damn, bro, you know, so like it's pretty like even makes it more like special. So I'm glad that someone like you is out there, because man, there's a lot of fucking fake fools in this space. Sorry for my language, but you know, it's like you like on FinTwit and everything, you don't know who you can trust. And like, you know, especially with someone like you always posting your losses and shit. And I'm like, damn, bro, like this is like rare, like a rare individual to be in this space. So it's just crazy, man. Like I
Thank
don't
you,
know,
bro.
just
Truly, thank you, bro. I appreciate it, man. Like you can see my face, bro. Like made me blush, bro. Like I'm
man, yes,
red right
sir. Thank
now,
you so
bro.
much for this Zoom session. And yeah, man, you have a wonderful, amazing night. And yes,
My pleasure,
sir.
brother. My pleasure. Thank you for being here, bro. Thank you for supporting it. And if you never need anything, bro, just feel free to send me a tweet, and I'll gladly respond, bro. I appreciate you, man. Thank you. Damn, bro. Hey, hey. Damn, bro. I'm shy. All right, boys and girls. Usually boys. Is there any woman? No woman. Only men. Have a wonderful day, guys. See you guys next time. And see you tomorrow in the VC. Later, guys. Have a wonderful day. I'm gonna post the recording after.